everyone, I'm Mary Stiglic with US Assure, and today we're going to talk about new construction builder's risk up to $10 million. But before we jump into the product, a little about US Assure. We are actually the exclusive program administrator for the Zurich Builder's Risk Plan, and we have been for well over 40 years, so we know a little bit about builder's risk. Now, what is builder's risk? Well, it's a policy that insures structures while they're under construction. It is a standalone property policy that insures materials, fixtures, equipment, anything going to be installed in that structure. Now look at these lovely pictures. Custom homes. We write tons and tons of custom homes, so we want your $1 million homes. Tract home builders. If you write contractors that build subdivisions, oh, we've got some nice policies for you. Even modular construction. Now, we're not looking for mobile homes, but modular, not a problem. You can even put small commercial on the small form. Now, let's take a look at some coverages. I do encourage everybody to read our coverage form. It is so interesting. But what I want to do is point out some things that are easy to remember, kind of selling points. The first one is theft. Theft of building materials. We can cover theft of building materials up to the limit of the policy. So let's say I'm going to build a house, we'll say it's a $300,000 home, and I have all $300,000 worth of materials laying on the job site. I come back tomorrow and all those materials are gone. Well, we would be on that risk up to $300,000. We don't have some crazy sublimit or some kind of clause that says, oh, the materials have to be installed before we cover it. As long as they're on the job site, we can cover theft of building materials. The same goes for property of subcontractors and suppliers. If their materials are on the job site and they're intending to go into that structure, we would be on that risk. Now this next one, 90-day occupancy clause. I want to compare that to the competition that writes on completion clauses. Well, by having the 90-day occupancy clause in our coverage form, that's how we can actually give you 2 years of builder's risk coverage, all because of that clause. So say I'm building a home, and say I get it done pretty fast, maybe in 8 months. I haven't been able to sell it, it's still in my inventory. Well, I still have 4 more months of builder's risk coverage. And if it's still in my inventory after that year is gone, we will allow you to renew new construction for a second year using the new construction rate, and you get to take advantage of the entire coverage form. Now let's compare that to a carrier that writes on a completion clause. And typically it's a 60-day completion clause, which means 60 days after completion, no more builder's risk. That could be a problem if I haven't sold the home. Now this next one, broad mortgagee language. So in our coverage form, we have almost a whole page of mortgagee language. And basically what it's going to say, if the customer does something to void the contract, we can still pay the mortgagee. Now they're going to have to jump through a couple hoops, but we can still pay them. So it might be a good idea to reach out to your bank buddies, tell them about this clause, and maybe they'll start referring some business to you. It's just a thought. Now all of these sublimits are automatically built into our coverage form. No additional cost. You need these coverages during construction, and you're not getting these on any type of permanent property policy. Things like debris removal. This is kind of important. What if you have a structure that's 80% complete, it collapses? Well, there's a lot of debris to get rid of before you can start construction again, and they don't take that debris away for free, so we built in up to $50,000. And oh, by the way, all of these limits, we allow you to increase them to meet the needs of your customer. Now, near the bottom, transit. You need this. How are you getting the materials to the job site? Probably on the back of a truck. Something could certainly happen to those materials, so you need transit. And then this last one, ordinance or law. Ooh, this is big time coverage. We built in up to $1 million for new construction and renovations only. And why do you need this? Well, let's say we start a structure maybe last September. We have a claim today. Well, probably from the time the project started until the time the claim happened, the ordinance was probably changed. Well, now it's going to cost us more money to rebuild. Again, up to $1 million. That is big time coverage. Now let's take a look at optional coverage. You definitely want to consider some of these. Now this first box, residential or commercial. So if you put residential on the small form or small commercial, you can take advantage of these endorsements. Let's go over the better green. This is kind of important right now. A lot of customers are using green materials. That's great. You need to ask if they are, because if they use green materials and a claim were to occur, it's probably going to take longer to get back under construction. First, they are required to recycle. Then you have to special order them. You can't really go down to Lowe's or Home Depot and buy those materials. Then it has to be LEED certified. All of that is extra time and extra money, and that's where the Better Green endorsement kicks in. Now this next one, change order endorsement. Ooh, this is a big one. I want you to think of it as a safety net. A safety net that you can add to the policies in 10, 20, or 30% increments, just in case your customers take changes and they forget to call you. Now, why is this important? Because everybody is taking changes, and with our small coverage form, we have what's called a co-insurance penalty. It's 100% co-insurance penalty, which means the structure needs to be insured at all times, total completed value. So if your customers take changes and they forget to call you, they're not insured 100% the value. So I encourage you to add this change order on there. Now, equipment breakdown. We see this more on commercial. Could we see it on residential? Yeah, maybe a multi-million-dollar home that has a media room, all that fancy equipment like projectors, sound systems. They probably have refrigerators bigger than my first apartment. Well, that stuff could break down, so you need equipment breakdown. Then when it comes to flood and quake, we can provide flood and quake in many, many situations. Just keep in mind, anytime you add flood or quake, it will hold our system, and underwriting has to map it. I don't care if the house is on top of a mountain, you ask for flood, it's going to hold the system, and underwriting has to map that. Now, soft cost. Do we see this more on commercial than residential? Yes. It's a good idea to take a look at the construction agreement to see if you need that coverage. But soft costs are basically things that your customer already paid for prior to construction. Insurance premium, license fees, permit fees, and there's a few other ones. If a covered cost of loss were to occur, they might have to pay those again. So make sure you cover those. Now this next one, building system testing. That would be things like fire suppression systems. Now on this next box, commercial only. So when you're putting commercial on the small form, you want to consider some of these things. Business income, loss of rents. Now this is not just for commercial, this is for commercial in the owner's name. Mary Stiglic's Pet Store. So I'm having a pet store built and my grand opening is going to be April 1st. Let's say we have a claim today. Most likely I'm not going to be able to open my doors April 1st. Am I missing out on income? Yeah, make sure there's coverage for that. Now, extended permission to occupy. We already talked about the 90-day occupancy clause and how great that is for residential. But on commercial, 90 days is probably not enough. Think of this. If your customer's building, say, a strip center, and there's 5 units in that strip center, maybe they build out one of those units and coffee shop moves in. Well, 90 days after that coffee shop's in there, no more builder's risk. Most likely, your customer needs coverages for the build-outs of the other units. So you need to ask for that 90 days to be extended. We will never, ever do that on residential, but commercial, certainly. Now, rain, snow, ice, or sleet. Good idea to add this endorsement to your commercial structures. Basically, what that endorsement does is takes away the verbiage in our coverage form that says the structure needs to be totally enclosed. Now, testing, hot testing. This is more for a manufacturing risk. They have equipment, you have to put some type of fuel source in there to test it. That's what hot testing would be. Now this last one, waiver of co-insurance. So we already talked about the co-insurance penalty on the small form, and residential, that is always going to stay in place. But on commercial, we allow you to waive that penalty. And it's a really good idea to do that on commercial, because if you think that residential has a lot of changes, well, commercial probably has twice as many. Now, our basic guidelines. Most of the time we receive what's called a one-shot policy, which is one project, one policy. I don't care whose name it's in. Who's your customer? If your customer is the owner, put it in the owner's name. If it's the retail operation, put it in their name. I really don't care, as long as the contractor qualifies. And the contractor needs to qualify with 2 years project-related experience. Now, what if the project's already started? Well, our system holds at 30%. It doesn't mean we won't take more than 30%. We do. We look at it every single day. But underwriting gets involved and they start asking questions. Well, why didn't the customer have coverage? And hopefully your customer has a really good reason that they didn't have coverage. Now, how do we write our policies? One shot. We kind of talked about that. One project, one policy can be in anyone's name. But what if your customer is the contractor and your contractor's building 20 homes this year? Could you issue 21 shots? Yeah, I don't really care. Money's money. But you could issue a reporting form. So you would be issuing a blank policy with an effective date and no expiration date. We would send out the reports to your customer every month. They're going to fill them out, send them back to us in a timely manner. And a timely manner is 30 days. So if you don't trust your customer can get these reports back to us in a timely manner, it might be a good idea to keep them on one-shots. Now, what if you have those contractors that build big subdivisions, 200 homes? You could issue 200 one-shots. That's a lot of work for you. If you put that kind of customer on a reporting form, it's a lot of work for that contractor. So a deposit premium is a better option. That's a fancy name for a blanket policy. So you would get with our underwriting department. They would come up with a rate based on how many homes, what's the average value, and your customer doesn't really have to do any reporting. At the end of the term, we would send out an audit. If they built more homes, well, we want some more money. If they didn't build as many homes, we'll give back some money. So perfect policy for those larger residential home builders. Now, I also want you to register with us. All you have to do is go to usassure.com, hit the orange button, and become an agent. It takes about 10-15 minutes. And remember, there is no volume commitment. Do I want your builder's risk? Yes, I do. But if you only need us once or twice a year, that's fine. Use us when you need us. And certainly, check out usassure.com. There's a wealth of information out there. You can also pick up the phone, give us a call. We want to hear from you. We want to help you write your builder's risk. We also have a resource tab. There's so many resources out there, too many for me to even count. So check that out. All right, enough talk. Go find yourself some builder's risk, and we'll talk soon.